Welcome back. Now, as South Africa leans towards digital payments, Lesaka's Cash Connect insists that cash will dominate this festive season. In contrast, however, Tshipi Alexandra from Absa Everyday Banking emphasizes a growing trend in digital payments adoption, particularly with bank cards that have been identified as a significant area of expansion. Is cash holding its ground in the face of digital payment growing trends? Joining us to explore this is Business Day's Mudiwa Gavaza. Mudiwa, always a pleasure. Good afternoon to you.
Good afternoon, Altambo.
All right, cash being a king, I'm wondering when I think of Lesaka and where they play, I'm wondering if when we speak about cash being king, it's specifically in that part of the market.
So they actually run a number of different businesses. So funny enough, they find themselves on both sides of the aisle on this end because they do have a service like Kazang, for example, which is your point of sale machines, that type of thing. That's helping to push up digital payments because they are a fintech company after all. But they have a big acquisition that they made over the last 2 years called the Connect Group. And part of that Connect Group is a unit called Cash Connect, which helps, companies to manage their cash. So people that are helping you to, let's say, at the end of the day, let's say you are you're filing your cash returns for the day, right? You're a merchant, you're a trader, you're a business, or your cash receipts, moving them from your store to the bank. All of that stuff, it needs management, and Cash Connect is one of the businesses that helps to do that. So Lesaka, playing on both sides of the field, and basically what they are saying is that yes, people are using digital payments more, but as a business, you can't just rely on digital payments because you're going to alienate a whole bunch of South Africans that are still using cash. Majority, actually, are still using cash, depending on what data sources you use.
So, a big part of the cash, discussion with you is that people use cash because they don't have another choice. Is that the case? It could be that some people like to have cash. It's convenient, they can always have it, and they don't feel like there's an intermediary between themselves and their money. Yeah,
there's a lot to unpack when it comes to cash use in South Africa, but the 2 points that I would make is, firstly, South Africans are used to cash, right? So one of the big things that you do as a financial technology provider is, if you're going to try and get more people to use digital payments, there's an education piece, but there's also a friction piece, right? Because literally, right, if you're a merchant or if you do something for me, I can literally take my money out of my pocket and give you the money and I've settled, right? We haven't scanned QR codes, we haven't signed in, we haven't logged into anything, we haven't, there's no crazy process that's happening. Value has just been exchanged. Now you have to explain to that person to say, okay, cool, but what did it take to get this cash into your pocket? The settlement between Nolutando and Mudiwa was easy, but what did it take for Nolutando to actually get cash into her pocket? She went to the ATM. She punched in she traveled to an ATM. One of the few, because ATMs are reducing in number, right? So she sought out her bank's ATM, she withdrew the money, she put it in her pocket. Someone potentially watched her, taking all this money out, potentially followed her. There's a lot of risks that are involved on that front. So there's a big education piece. The other piece of the equation is a lot of your digital payments have been, we talk about vectors. Vectors basically being what is the method of distribution, right? And in Africa, we've spoken quite a bit about the cell phone. But a lot of the data, funny enough, also coming out from Lesaka, is to say, guys, South Africans are actually not that comfortable using their phone as a store of exchange, right? Why should you trust your phone with your money if this thing is at high danger of being stolen, right? Which is then where the likes of Tshipi Alexandra come in to say, actually, we are seeing huge growth on card, because right now that seems to be an interesting situation. Everywhere else in Africa, cell phone, cell phone, cell phone. But in South Africa, They're like, people are a bit, skeptical about putting in their PIN in public, about someone grabbing their phone. We've heard of people actually being held up, and their accounts being drained, right? So there's a huge risk there, but card now is being seen as, okay, cool, this thing is actually going to help us to push for, and it helps that SASSA cards, for example, can now be tapped on a lot of POS machines. So all of that is helping.
I wanted to speak about the issue of maybe tapping and swiping, which I think many banks actually offer for free, where they might charge you a fee to withdraw. But of course, they charge you once-off fee if you go off and you draw all your money, Mudiwa. So I'm wondering if also the way in which fee structures are, put together, that also may be driving consumer behavior.
Yes, definitely, because part of what the data says is that small payments especially, right, is if you're buying bread for, who knows, 10, 15, 20 rand, if you're buying sweets, if you're buying one cigarette, stuff like that, you shouldn't be swiping or tapping to buy like one cigarette, which is why cash remains king in a lot of cases. Interestingly, the figure that we've been given is that the point of friction that banks need to crack is 50 rand, right? That is the threshold or tipping point, because a lot of the time, remember, merchants have minimum, to say if you want to swipe, right? If you've ever been into a spaza or a small shop where they say if you want to swipe, this is the minimum you can spend. So 50 rand. Anything below 50 rand seems to be the domain that the banks haven't figured out when it comes to digital, because the cost of the transaction fee is still too high for the merchant to justify having someone actually, coming in and tapping. So the 50 rand, I would say that's where the biggest opportunity probably lies, and from a fee structure, that's probably where the most what's the word I'm looking for? The most opportunity lies. And if you see what the likes of MTN have done, right, one of the things they shout about is the fact that they have, no fees for a lot of transactions. And it's because of things like that. If they can get you in for the tiny amounts, look at what tiny amounts have done to Vodacom's airtime lending business, right? 48% of all airtime for Vodacom is now lent, right? And people are not buying like 100 rand of airtime, they're buying 5, 10, 20. So if you can solve for those small amounts, then we can go far.
Very interesting trends we're seeing coming out of South Africa. I still think cash is king, Mudiwa, but we'll be watching that one very close. Thank you for your time. That was technology correspondent for A Business A Day, Mudiwa Gavaza. Up next, we weigh South Africa's mining output with